Thank you for joining us at FutureMoneyTrends.com. I'm here with Bradford Cooke. He is the founder and CEO of both Endeavor Silver, trading on the New York Stock Exchange, and Canark Resource Corp, trading on the Toronto Exchange. Mr. Cooke, thank you so much for being with us today.
My pleasure, Daniel.
Brad, I want to get into the gold and silver markets. A lot of people are fishing around for answers. It's been pretty volatile lately, and depressing on the silver side. Silver's down pretty significant since the last high, last April of 2011, May of 2011. What are your current thoughts and expectations on the gold and silver markets for the remainder of 2012?
Well, Daniel, I think that the spectacular highs made in both last year had to lead to a very significant correction to consolidate those gains. I believe that we are coming to the tail end of that correction, which is more than 12 months now for silver and about 9 months for gold. For instance, in mid-May, we saw a classic three-day spike down capitulation on the metal prices, which was immediately followed by a robust rebound of the producer stocks. For instance, my company, Endeavor Silver, in the 2 weeks following the mid-May low, had a full 30 to 35% recovery in the stock price. And that was across the board amongst the producers. Hasn't hit the juniors yet because they're always the last to move, and we're still really at the tail end of this corrective phase. But the good news is that we are in the middle of the so-called summer doldrums for the precious metals, and yet there's still great concern about the European debt crisis, notwithstanding this past weekend's elections in Greece and what looks like a party in power that will work with the ECB to get through their troubles. I think that there's more potentially grave problems coming out of Europe this summer. So the traditional seasonal strength of the precious metals, which starts late August, could come early this year.
Now, when you look at Europe, do you see Europe being bullish for gold and silver, or are we looking at like a 2008 situation where gold and silver would go down in a crisis?
Well, of course, whenever there's a stark panic, then there's a rush to the safety and liquidity of the U.S. dollar, which is not good for gold and silver. But I think we saw a little bit of that in the last couple of weeks leading up to the Greek elections this past weekend. We may see a little bit more strength in the U.S. dollar over the next few weeks, but notwithstanding that, the next sign of distress coming out of the European debt markets, be it Spain, Portugal, or Italy, will spark another round of panic to the U.S. dollar, mini panic. So strengthening of the dollar, slight weakening of the gold and silver, but ultimately it won't take long for the markets to turn around and recognize that the only way out is either default or debasement. Printing money has been the traditional solution for governments who couldn't pay off their debts to come up with the money to service them. And that's really all that's gone on so far in Europe. This crisis came to the front pages in 2009, so we're going on 2.5 years now, and yet they haven't paid off a single dollar. All they've done is reschedule bad debts and service them. So clearly, there's more QE coming, both in Europe and the States, in order to start dealing with the intractable amounts of deficits and debts.
What do you think the balance of the U.S. as far as the Federal Reserve with doing more QE? A lot of people are expecting it this week. My personal opinion, I think it's going to be a big disappointment. I think it's probably coming later, probably in August. What are your expectations of QE and how will it affect the gold and silver markets over the next few months?
Well, again, Bernanke's been very clear that there's no need for QE in the States at this time. However, as I mentioned just now, the U.S. has the biggest debt and deficit problem in the world. And while there's sufficient recovery from recession to kind of stay the course for now, it won't take more than the next crisis out of Europe to force Bernanke's hand. So I do feel that there is more QE coming in the States. I think it's unavoidable. I can't tell you when. But given that this is a U.S. election year, it's a good bet that we'll see it before November.
Brad, when you're traveling the country, Canada, the U.S., the world and talking to different people all around the world, what are they thinking as far as, or what is your feel as far as the rest of the economy? You know, a lot of times we get trapped in our own little bubbles where our own local economies. Is the rest of the world in a major slowdown right now?
Clearly, I think there's signs of slowdown worldwide. China, in particular, is not going to be able to meet any 10 or 12% growth forecast this year. We went through that kind of a dip in 2008, very significant dip in economic growth and activity worldwide. Clearly, the globe was able to recover from that. This is yet another slowdown based on the financial crisis coming out of Europe, and there will be a rebound from that. So I'm not concerned about the what looks like short-term slowdown worldwide.
Brad, looking at the junior mining industry, which you heavily know and are involved in, what are your thoughts right now? A lot of the juniors across the board, good, bad, ugly, whatever, have been sold off pretty significantly. Do you feel like we're at a bottoming period right now? Maybe an all-time bottoming period? I mean, these things are super low right now.
Well, they are. We have to differentiate the exploration stocks from the production stocks from the metals. And the metals have already bottomed, and I think there's every reason to assume that the precious metals will take on more and more precious shine as it becomes evident that much more currency printing is needed to get out of the global debt problems. And I mean, a lump of gold is a lump of gold. It maintains its value. That's the purpose of holding gold in a portfolio, is that it has constant value. It is the value of the currencies, of course, that falls, and they tend to fall every year. Purchasing power of the dollar is a fraction of what it was even 20 years ago. So there's good reason to hold precious metals in your portfolio, and I think that alone is what people need to know. And whether or not there's QE this month or next month is beside the point. Clearly, QE is needed.
Now, in the mining industry, you actually have your hands involved in both. You're the founder and CEO of Canark Resources and Endeavor Silver. If you could just give us an update on Endeavor Silver. You know, a lot of people might look at the share price and wonder how much opportunity is left for them. And in my opinion, those who look at just the share price don't truly understand value of a company. But for everybody who's listening to this, if you could just briefly tell us what the updates are for Endeavor Silver and Canark Resources.
Well, so I was talking about the difference between exploration stocks and production stocks. Endeavor's in a wonderful position in that its cash costs of production are in the $5 to $6 per ounce of silver produced range, whereas our current revenues are in the $30 per ounce of silver sold range. And so we're making basically $25 an ounce gross margin. Those are fantastic numbers in any business. And so we're making a lot of money at this time, and we're in a very strong position, notwithstanding the sell-off in the price of silver. I should also point out, though, Daniel, that if you'd asked me in August of 2010, when silver was $18 an ounce, when I thought about $30 an ounce 18 months later, I would have been thrilled. So this focus on how much silver and gold have backtracked from their highs last year is really short-term thinking. If you just go back 18 months, both metals are up strong, and I think that trend is where we're headed. It's just more and more for several years to come until the end of this market.
On Canark is on the exploration side. If you could just briefly introduce people to Canark who may not be familiar with it, as they are Endeavor, as well as what is the status as far as this company?
So Canark was my first company, founded in 1988. We've been involved in 2 material gold discoveries. We have a main asset, a 1.1 million ounce high-grade underground gold vein deposit in northern BC called New Polaris. That's the core asset of the company, and with the drought in the exploration stocks, of course, Canark, like many, has been under pressure, and the stock is close to its all-time low, trading around 13, 14 cents Canadian. What is that? Almost less than $10 an ounce in the ground. I mean, these types of values, it's been a long time since we saw opportunities like this, and so I believe that we are close to all-time lows in terms of exploration company valuations. And it is a wonderful opportunity for investors to take positions in anticipation of the next wave in the gold and silver cycle.
Now, you are a geologist. You're also clearly an entrepreneur, taking Endeavor from just you and your co-founder, and basically to 1,300 people currently working for it. Do you feel like you can do the same thing with Canark, and is that the goal?
Oh, very much so. And, we have for years focused only on exploration in Canark, and there's a little bit of boardroom envy now because of the success of Endeavour at moving into production. Because of that, we've changed our business strategy in Canark, and we're very much focused now on moving up the mine development cycle from exploration to development to production. And if we can find a way to fast track that through an acquisition of either a producing mine or something that's ready for development, we're very focused on trying to partner or finance our main asset to production. And if another opportunity came along to buy something that allows Canark to follow in Endeavour's footsteps, absolutely, we'll jump on that.
Bradford, when looking at the basically Canark Resources, Endeavor, a lot of people would like to learn more about these companies. Do you have different specific people you'd like them to contact for each company?
Well, certainly. The companies maintain investor relations departments and websites, so people are welcome to contact us through our websites at Endeavor. That's www.edrsilver.com. And at Canark, it's www.canark.net.
Brad, did you happen to get the chance to go to the recent Vancouver show?
I think I spent an hour there, Daniel. It's just been a very busy period for us with Endeavor having announced a new acquisition of a third producing mine in Mexico, and Canark having announced that we've taken on an agent in order to speed up our process of creating value for stockholders.
Just I know you probably talked to people that went to it because you are in Vancouver, and Vancouver's where almost all the mining stocks are. What's the overall sense and mood is from 5 years ago, pre 2008 or 2 years ago? How was the mood? Just to give you an idea, I went to San Francisco in November of 2011, and the place was dead. And which was very encouraging to me because then it means that we're not even close to anywhere near where we need to be in this bull market. And it was kind of exciting that it was so dead. How was Vancouver?
Yeah, Daniel, it was exactly the same. It's an irony in the business that when things are hot, then people flock to these conferences, and they're chock-a-block full of opportunities and deals, all flying high. And that is usually a sign that you're getting close to a top. And, of course, when you go to a conference and you can hear echoes in the hall from people talking, that tells you that maybe we're getting close to the bottom and it's a good time to buy.
Brad, thank you so much for your time. Really appreciate it. You have a great day, sir.
My pleasure. Thanks, Daniel.
Thanks.